Hey everybody, welcome to this free edition of our Trader Use Group Weekly Roundup for the trading week ending July 28th, 2023. I'm Preston Brent. Thanks for tuning in. This week's theme, rock and roll. I don't think it's going to last very long, but for now, things are looking pretty good. Let's take a look at how this past week shaped up. If we look at the index performance, you can see everybody solidly in the green. Look at NASDAQ up almost 37%. I think the PE ratios are getting a bit stretched. You can see on the right-hand side, the forward 12-month is 20.97. That's very high in my estimation, given what I'm looking at and the economic data over the next 12 months with interest rates fairly high, over 5%. We'll talk about that in a minute. You can see all of the indexes are in the green for the year. Dow bringing up the rear 6.97%. Although the Dow has been playing catch up, it notched its 13th consecutive daily gain this past midweek on Wednesday, and that marked the longest winning streak since 1987. So it was pretty good for the Dow, catching up. The other that was playing catch up as well is the Russell, the small cap. And then we can see the best sector performance both this past week and for the year, and the worst. You can see the best is communication services, not only for the week, but also for the year. Energy is the worst for the year, utilities for the week. Excuse me. Flip that around, it's completely opposite last year. Annual sector performance, the best was energy, the worst was comm services, communication services, and now they're completely opposite. Now, I will say that on Wednesday, hang on one second, guys. Let me just bear with me 1 second here. Let's get something set up here. Hang on 1 minute. Sorry, folks. This past week, we did see that the major CPI data came in, or GDP rather, came in at 2.4%. I guess we're expecting 2, so a little bit of an extension there. Durable goods jumped also. Consumers are still spending. And then on Friday, sentiment also got a boost. Excuse me, guys. Hang on a minute. I got to mute myself and cough it out. Sorry, guys. So basically, we got good data this past week. Lower inflation, higher GDP. The PCE, the personal consumption expenditures on Friday, also came in at 4.1%. That was a little bit lower than expectations. And it's the lowest that it's been since 2021, or the lowest increase. So we are moving lower. And then also, not to be outdone, the Fed's announced a 25 basis point rate increase on Wednesday. So Boom Powell, he came out and he did say that restrictive monetary policies now put a little bit of downward pressure on economic growth, but he basically said they're going to follow the data very closely, and that's going to determine what they do in September. We do not have a meeting in August. He said September is still a live meeting, and the data is going to tell us what we need to do. And well, the first data we had after his press conference Wednesday afternoon was the PCE on Friday, and that came in lower. So that really moved the markets up. The markets love that. You can see the 10-year Treasury at 3.97, just slightly under 4%. I do believe that interest rate's going to slide lower. In fact, the bond market is suggesting that the interest rate's going to move lower. Dividend yield at 4.78. You can see here that the VIX is still below a 14 handle. It came in this past week down just a little bit at 13.33. So all in all, a fairly strong week for the markets. And then, of course, if we look at Europe and the rest of the planet, over in Europe, everything was in the green this week. Year to date, everything is in the green. ECB also increased their interest rates. They're up at a record high for them, 3.75%. most of the markets over in Europe and the US expected that. They did say that inflation is still high, but the odds are falling that they're going to continue hiking their rates unless they get a surprise showing in inflation. And their inflation did come down in June, like here. Over there, it's 5.5%. That was down from 6.1 in May. So well above their 2% target. They may have to bump it up to 4%, I suspect. Although the Feds here, they may stand pat in September. We'll see what they're going to do. See how that thing shakes itself out. And then, of course, if we go over to the Asian markets, look at the Nikkei up 25.57%. I haven't seen the Nikkei that strong in decades, right? Green also across the board in the Asian markets. They had a monetary policy meeting. They kept their short-term interest rate unchanged at a minus 10 basis points, right? And they really kept their 10-year government bonds, Japanese government bonds, at 0%. Right. But one of the things that the Bank of Japan did do that surprised investors, I've been saying they're going to do it. It's just a matter of when. They did say they're going to give the yield curve control greater flexibility in how they let their range manipulate interest rates. Longer term, that's going to be bullish the yen. Shorter term, we'll get a little bit of that chop. And we did see also over in Japan, their GDP is going to expand about 1.3% year over year for fiscal 23, right? That's kind of their projection. And then CPI is going to be around 2.5%. They want it to be steady over 2% before they start really reducing that yield curve control that they have. And that'll be even more positive or bullish for the yen. Now, what I'm going to do is I got to freeze my screen for a second, so just bear with me 1 second. And let me just get this here. I've got to open up another chart here. So what I'm going to do is I'm going to get the E-mini S&P 500 futures on the screen for you. And I'm going to go through and just kind of show you where all the charts are, at least at a high level, some of the major indexes. Whether it's the Dow or the E-mini S&P or the NASDAQ or the Russell. And then I'll show you, we'll go over and we'll look at volatility real briefly, and then look at some of the major other asset classes that are sitting there that I think are important for us. So just bear with me 1 minute. I'm going to have to adjust some things on my screen. Oh, that's really weird. Bear with me 1 minute, guys, as I move some things around. I got multiple monitors, so this tends to really move around a little bit. Let's just get this over here like this. All right, here we go, guys. I'm getting real close to getting it set up for you. So now let me just set this screen up for you. I'm going to show you the screen here. Here we go here. Let me move this over. All right, so what's going to come up on the screen here in about 10 seconds for you is the S&P futures, all right, the E-mini futures. And you're going to see here that we hit a high on July 27th of 19.81%. It's an Elliott wave 3 up, so that's an impulse wave. This is suggesting we're going to get a pullback. Keep in mind, August and September going into October are typically pullback months in the market statistically. I'm looking for 4 to an 8% pullback. Now, you may say, what's the catalyst? Because the economic data is coming in good. Earnings are coming in good. Consumers are still spending. Inflation is coming down. So what's going to move the markets? Well, I think the higher rates, the lag effect of having higher rates is going to start to take effect as we move through August and September. And then even bigger, as Congress comes back from their 6-week vacation in September, they're only going to have or late August, they're only going to have about 5 or 6 weeks to get all the budget lined up for the new fiscal year for the U.S. government. I think they're going to miss that, and I think they're going to come in, and we're going to see a big fight between the Republicans and the Democrats on what's acceptable spending and what's not, and it could force the government to shut down for a few weeks to a month until they come up with some kind of agreement. I see that fiscal battle setting up. If we have that, it'll give us that 8%. Otherwise, I think we could just drift a little bit lower just because of summer months before we move into the fall time. So that's a little bit about what I'm seeing. In fact, my using a combination of Gann and Fibonacci, it's saying a potential Elliott wave 4 pullback is anywhere from about 44.60 to about, let's call it 43.50. So a few hundred points. I think 200 to 400 point pullback would be normal in the E-mini S&P 500 futures. Okay. Now, if we come over here and look at the Dow, I'm going to get the Dow futures on here for you. You can see the Dow hit a new high on the 27th, up 7.59%, just a little bit of a pullback, but you could see that run on the Dow, right? I mean, the run started on July the 10th, and we just had a really super run, a lot of nice movement in the Dow futures. Again, like the E-mini S&P 500, I'm expecting a little bit of a pullback here. And then, of course, if we look at NASDAQ, it had a very strong day on Friday. But you can see we're off the highs here that were made on the 19th of July. It did make new highs the other day like the Dow and the S&P did. But it was up 45.47%. And even though they did a little bit of a rebalance, it's not enough for those big 7 stocks that still control over 40% of the NASDAQ 100. These 7 stocks are really over 20 some odd, 23, 24% of the S&P. Pullback note on this is looking at around 14,140 roughly. We're sitting at 15,840. So you're looking at, about 1,400 point pullback in the or the Dow futures. I'm sorry, the NASDAQ futures. And then, of course, if we look at the Russell, you can see here with the RUT, it also caught fire. We haven't made a new high in the RUT since February 2nd of this year. But it's set up really nicely. A little bit of a pullback would make sense. We are in a buy the dip mode as an FYI. I am looking for a pullback, but we're going to wait for a dip and then a signal to get in. And members, it'll be a good trade for us. And of course, as I said, if we look at vol, if you look at volatility here, you can see we're just on the cusp between green and yellow. So we're still in a nice area here for the VIX. I do believe in the month of August, we're going to see some pop up here in the high teens, maybe even, depending on the severity of the pullback, to the low 20 area. But it's going to be a buy the dip opportunity. It's not going to be a reason to just shut everything down and expect another bear market just yet. I do believe we're going to have a recession, but it's probably out till next year. The futures market, as an FYI, is pricing in only about a 27% chance of another rate hike by the end of this year. And before last week, that was 90.8% of another rate hike, including yesterday or this past week. So it dropped considerably, and those valuation models spin off and say buy, 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 and that's what happened. If we come down and look at treasuries, you can see the bond market, as interest rates move up, the bonds move down. I believe bonds will take out the 2023 lows, but then there'll be a buy-in opportunity here for being long bonds or TLT, all right? And if we look at the 10-year rates, the 10-year rates moved up. Obviously, you could see the 50 EMA is just a catch-all point for the 10-year or the 50 EMA. Rates are moving up. I don't think the rates are going to move up much more than that. And then shorting the rates or going long TLT makes sense if you want to make that trade. And of course, if we look at currencies, the dollar is longer term is weak. All right. Any move up here, I think it's going to roll over again. All right. And then the euro is just the opposite. Any dip is worth buying. Right? This is worth a buy right here. You could see almost the exact same pattern over here back in early July, right? We came down, kissed the 50 EMA. We had a red candle, and a green candle, and away we went. So here's a red candle and now a green candle again. I think this could move up. You could see there is no divergence in the MACD. This would suggest the euro wants to go higher long term. The dollar wants to go lower. And in the yen, well, they're not technically technically they're playing with the yield curve control, but they're not changing much of it. That's why you got that really weird candle right there. I think the odds do probably favor this thing drifting a bit, but when they come out and announce an actual yield curve controlled change, then I think the yen longer term is going to be bullish. That to me is a good trade. And then, of course, if we look at gold, um, well, this past week, you can see gold has been moving down just a little bit up, but I think gold is probably going to come down a little bit lower before it catches wind and starts to move higher again. Right? Silver's the same. And if we look at copper right here, you can see copper, it's just been a longer term down move, right? I mean, you could just see this move right here. We're trying to break out right here. If we break out of this shaded zone, then maybe copper is done with moving lower and some bull put spreads underneath copper makes sense, right? Or FCX, which is the ETF that basically trades Freeport McMoran. It's very close to copper, right? You can see this starting to break out right here, so that could be good. And then, of course, oil, it actually moved into the green. I mean, just barely in the green for the year. Big move up. It's going to suggest any dip in oil should be bought right now. All right. And then one thing I haven't talked about much, but if we look at it, gasoline prices haven't been this high since last year. Look at gas futures. They're up around this level here. The last time we were up here was back in November of last year, right? And if we zoom out, you can see this level right here is right where we were right here. So I'm going to watch this closely to see if this is a signal to start setting up some shorts, or has it got a little bit more room to run? Right now, I think it has a little bit more room to run. You can see how gas just was ignited to the upside, right? From about $2.47 to about 2.95, right? And that's gasoline futures. And then, of course, nat gas. Well, bull put spreads are the prescription for this guy right here. You want to be selling um, uh, uh, puts and then buying puts underneath. And I think it's a good trade here. This dip is not going to go very deep, but let it go down a little bit more, set up another bull put, and then you're off and running. All right, everybody, that's a real quick synopsis of where we are this week. Members, I'll see you tomorrow night, Sunday evening. Got a lot of stuff to talk about, some opportunities as well. Otherwise, have a really great weekend, everybody. And members, I'll see you Sunday evening. Ciao, folks.